On the Brisbane Property Podcast, it's market update time.
We've got a full report on what has been happening throughout April 2025 as market activity took a backseat to 3 weekends of public holidays and lower transaction volumes. We've got everything to share with you in this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison, and it's market update time.
Yes, welcome back, everybody. We're excited to bring you the very latest data from what used to be CoreLogic, now Cotality and also PropTrack. So we're going to be reporting on the data and also providing some insights in terms of what we have been seeing on the ground over the past month by being out and about. And I will start by saying it has been a quieter month throughout April, Scott.
Might take me a little bit longer to get used to the Cotality compared to CoreLogic, because we've talked about CoreLogic for so long, but we'll get there. April, it is always a strange thing in Queensland, I find. We have so many public holidays through that Easter period as well. So April, obviously school holidays.
That's right.
And then we've got the Easter, we've got Anzac Day, and then obviously not quite in April, but in May, the start of May, we've got Labor Day in Queensland.
3 long weekends in a row.
Yeah.
So it really does disrupt the real estate flow. I know auction volumes, for example, throughout those 3 weekends have been well below what they typically would be across Brisbane. And of course, with a lot of people being away on school holidays or even just on long weekends away, it does also impact on that buyer volume that's out and about. So the market has definitely seen a shift in terms of buyer and seller sentiment across those 3 weekends, but we do expect that will pick up again throughout May. And in fact, we're really expecting that it will be a strong month in terms of buyer activity. Now that the federal election is complete, we're at the time of recording, we're likely to see interest rate cuts through the month as well. So that's likely to also bolster demand. And, we're in a very low supply environment here in Brisbane as well.
Now, when we talk about the Labor Day for the southern states and other states, obviously they have their next long weekend, I think in the June long weekend. I grew up in New South Wales and it was always June long weekend. So we have ours in May. The other thing to consider here and to keep in mind is when Melinda talked about the auctions being quite low and not a lot, there wasn't actually many auctions on. So what happened is a lot of agents they held back their listings because of the long weekends that were coming. And also on that last, which we call Labor Day weekend in May, we actually had the federal election. So no one really wanted to do an auction, or there wasn't much activity. So yeah, look, I think it did disrupt everything quite a lot here in Brisbane. But yeah, I agree. I think now the election's done, school holidays are done, everyone's back to normal, and we're seeing a bit more activity and things starting to float a little bit. So, but despite those distractions, Brisbane market demonstrated some more upward growth.
Yes, so throughout the month of August, according to Cotality, and for all of those listeners that are regulars here on the Brisbane Property Podcast, when I now refer to Cotality, that is CoreLogic. It is the same company. They have simply rebranded. So I may use them interchangeably myself because I'm so used to calling this data CoreLogic data, but Cotality is the new brand name for CoreLogic. So we're going to be using them as one. Yes, market momentum eased as we've highlighted. However, dwelling growth continued on the same trajectory as it did in March. We still saw 0.4% dwelling price growth here in Brisbane throughout the 4 weeks of April, despite what we've described as that market, pausing in terms of buyer and seller activity. So that's been an interesting trend. It is the result that is consistent with what we observed in March. So it is the same upward trajectory in terms of price changes.
When we look at capital cities, Brisbane outperformed Sydney and Melbourne, which each saw only 0.2% growth in April. Adelaide and Perth delivered some solid results, 0.3 and 0.4 respectively. Darwin led the month, 1.1 increase. But if you look at over 12 months, Brisbane values up 7.8%, second only to Perth at 10%, Adelaide at 9.8%, and far outpaced, obviously, Melbourne at negative 2.2 and Canberra at negative 0.6%.
Yeah. Okay. So just to reflect and correct you there, Scott, Brisbane's in third place at 7.8%. Perth and Adelaide are in first and second place. So 10% for Perth, 9.8% for Adelaide over a 12-month period. But when we're actually looking at the 3-monthly changes now, we have seen Perth really handbrake, and we'll talk a little bit more about that when we're looking at house price growth and price growth throughout this episode. But what's interesting is that throughout Australia, when we're looking at all capital cities combined, the housing market, generally speaking, outperformed the unit market. However, it is so important for listeners to understand that here in Brisbane, that trend is not consistent with the national trend. Units here in Brisbane still recorded stronger growth than houses. That's over the month and over the quarter, and we've definitely seen that occur over the last 12 months as well. So this is a divergence from the national trend, and it does highlight the fact that Brisbane is unique in its property landscape, and it's so important that people that are not here on the ground understanding those supply and demand metrics for different product types. We're seeing this roll out in the data, and we've been talking about this for over 2 years now here in Brisbane. So well-located attached dwellings are still in very high demand, selling very quickly with multiple offers, and in fact, much more demand has been seen in that part of the market for many, many months now.
You've got a little bit of information, obviously, on the taxation side of things. Before you jump onto that, one thing I haven't done for a while is tell people about the weather.
The weather.
And yeah, I know we've actually had a fair bit of rain, which it's not a great thing to be advertising, but look, we've still got some beautiful days up here. And this time of year,
perfect weather.
We're in May, and it's still quite beautiful. I'm getting up, still doing my swims in the morning, and you're doing your runs, and it's still quite lovely at that time of morning. We're not as cold as the southern states, but we are getting a little bit of rain. So
giving people some insights into our personal life. Yeah. We are that family that are up and out the door at
4:30 every
5
morning.
a.m. And yeah, that's when we have time to get our exercise in. So with adult and teenage boys who are very active, it's a lifestyle that we've always led. So absolutely, we're up and out the door, and I can tell you right now that the temperature in the morning going for a morning run is absolutely brilliant.
Beautiful.
So nothing better.
So is the water temperature.
Bit cold for me to swim. Okay, looking at some of the taxation information, new data from the Australian Bureau of Statistics has actually confirmed that property-related taxes, the government collected more than $45.2 billion of revenue through property-related taxes between 2023 and 2024, or within that financial year, and that's an increase of 12.5% year on year. Now, this is huge and this is significant because we've just had a federal election and housing affordability has been on the agenda for some time. And a lot of both parties actually put forward policy change that included more stimulus that's going to create more demand. And this relates to first home buyer incentives and things like that. Now, when we see that the demand increase, if we don't see a corresponding increase in supply, and we know we've got the Federal Housing Accord, there's targets in place to build more dwellings, but we are so far behind in terms of what's actually being delivered. And so the supply and demand imbalance simply becomes more prolific. We've got stamp duty alone for state governments, $30.8 billion of revenue. That's an 8% rise. Now, for buyers, these figures actually translate into increased transaction costs. I will say, though, here in Brisbane, the cost burden is not as bad for stamp duty as it is in many other locations. So when we actually rank the stamp duty costs to purchase in Brisbane compared to all other capital cities around Australia, based on the average house price for each location, Brisbane ranks as the 6th most expensive city. So actually that's pretty good. There's other locations that are a lot more expensive when we're looking at those transaction costs, especially in relation to stamp duty. And perhaps this is one of the reasons why investor lending and investor activity throughout Queensland is still elevated and fairly strong compared to many other locations around Australia. So I do believe that even though stamp duty is a significant upfront cost, comparatively speaking, for those purchasing here in Queensland and more specifically in Brisbane, our stamp duty costs are ranked sixth, looking at all capital cities nationwide. So it's more affordable than many other states in terms of those upfront transactional costs.
So it's obviously an area that, I mean, the government does make good money on stamp duty.
It does, yeah.
It could be an area that they could look at to help it make more affordable for people to actually get into the market as well.
Yeah, I mean, when we're looking at Sydney, for example, $75,458 would be the average first home buyer stamp duty paid on a median house price in Sydney. Melbourne, 56,900 or thereabouts. Brisbane, 32,000. So you can see, just looking at the highest or the largest three capital cities, the big differences in those upfront costs when we're actually comparing the stamp duty costs. And look, we're basing that on the median house price for each of those jurisdictions. So really interesting, the differences that can occur. And of course, this can influence buyer behaviour in terms of, where people might be looking to buy, especially if they are property investors. The stamp duty and the upfront costs can, cause a significant impact in the decision-making process.
There's obviously been some things from the US, like external forces, things like the tariffs and things like that. They're having a bit of an effect. It's not so much that direct effect, but it's obviously coming then via China for us, because that's one of our biggest customers, basically.
Yeah, definitely. Now, we can't underestimate the impact that the US trade tariffs are likely to have on an international scale. I mean, some of the tariffs that have been imposed on Chinese imports, that could influence growth in China. And of course, that could then weigh down on business confidence in Australia, because we do export so many raw commodities through to China. So obviously, this could lead to a weaker labour market, and that could then dampen consumer sentiment and delay property-related decisions. So these are the things that we're looking at from an international perspective that could impact on the property market, that may have an impact on that longer-term demand. But of course, on the flip side, the uncertainty that the US trade tariffs have created have meant that there's been so much volatility, especially in the share market, as an example. And therefore, a lot of people have been or may turn to property as a safer asset class. We've already seen the Reserve Bank of Australia starting to trim interest rates. We saw a rate cut in February. We are expecting more rate cuts throughout the year. And so that means borrowing costs are likely to fall. And a move like that could further stimulate buyer demand. And that's the reason that we have this type of policy in place to actually try and regulate the market. So people do turn to property as a stable asset class in times of uncertainty. So although we're very aware that sometimes, demand can be dampened by some of this international unrest, it can also cause people to shift money into a stable asset class. So time will tell, what eventually unfolds, but we're sort of watching all of these things on an international level as well.
Cool. Let's jump on to some dwelling values. So April, obviously all our listeners obviously know we talk Greater Brisbane here as well. So Brisbane median dwelling values rise to $907,864, 0.4% increase for the month and 1% for the quarter.
Yes. So again, dwellings includes houses and units. We have now seen an increase of 71.1% in Brisbane's dwelling values just over the last 5 years. And looking over the last 10 years, it's been a 91.2% increase for Brisbane. So really strong growth, and one of the the top capital city markets looking at that 10-year growth trajectory. So yes, Brisbane dwelling values have shifted fairly significantly over the month. Nothing like it has been in the past, but when we talk about these shifts, comparatively speaking, Darwin shifted 1.1% and Hobart 0.9%. Other than that, Brisbane's up with the other capitals that have shifted at 0.4%, which include Canberra and also Perth. Every other capital city market shifted at a lower rate. So I certainly wouldn't say that this is a fast rate of growth, but it is enough to say if you are shopping with a $1 million budget and the market's shifted 0.4% over the month, that's a $4,000 shift. So, when we are looking month to month over a 3-month period, even at this rate of growth, you're looking at a $12,000 shift in value. So these are numbers that do translate to you needing to dig deeper into your pocket the further or the longer that you delay a buying decision. Thankfully, we're not looking at, monthly growth rates of in excess of 1.5% and 2%, which wasn't that long ago, and we were reporting those sorts of numbers. But right now we are still moving upward, but at a much slower pace.
Yeah, I think consistently last year I kept saying 1.4, 1.4 over and over again.
Yeah, it was a strong period of time.
PropTrack obviously reported slightly subdued growth, but still a growth there of 0.19% for dwelling values. And then the segmentations of the market, again, that lower percentile is obviously the higher part that's performing really well.
Yeah, so here in Brisbane, that trend is continuing where the lowest 25% of property values are growing at the fastest rate. Over the last quarter, the lowest 25% of property values shifted 2.1%, whereas the most expensive quarter of the market shifted only 0.1%. Now, again, this is dwellings values, and when we're seeing the unit market outperform the housing market, and generally speaking, the unit market is sitting in that lower quartile, we are expecting that to be somewhat affected by the compositional bias. I will say, though, off the back of the rate cut in February, we've now already seen a shift in some of the more expensive markets. So what I mean by that is in Sydney, for example, over the last quarter, it's the top end of the market that's driving the growth in this location once again. So in Sydney, it's the top 25% of property values that have outperformed compared to the middle segment and the bottom segment of the market. And this is a trend that often occurs as we see lending capacity increase when interest rates are cut. So we're yet to see that here in Brisbane, but it's certainly a trend that's already occurring in Sydney.
House values. If we jump onto the house values, we've seen median house values rise to $989,818, up 0.4% of the month, 0.9% for the quarter, and that's a 6.8% increase over the past year and slightly down from the 7.5% annual growth predicted recorded in March.
Now, I'm just going to say, it's not going to be far away, Scott, and we're going to be reporting on our podcast that Brisbane's median house values have shifted above the $1 million mark. Now, it doesn't feel that long ago, and we were able to buy houses, in quality locations in Brisbane for $400,000. Those days are gone. There are no homes. I mean, you can hardly buy a unit for that sort of price these days. Now, the fact that we are approaching that $1 million median value for a house, it has to tell the story for buyers that are in the market that are still shopping for a house with a budget of $700,000 or $800,000. You are well below the median, and there's got to be compromise on where you're buying to actually get into the market. But yes, very consistent growth. And I will say in the housing market that our growth for the month of April has increased slightly compared to March and also compared to February. So there's slight acceleration or re-acceleration happening in that segment of the market because we saw that slow down earlier in the year.
And a PropTrack obviously reported an increase as well, slightly lower again at 0.21%.
Yeah, so when we look at the national change in house values, capital cities rose by 1.1% over the last 3 months. So for Brisbane, it's sitting at 0.9%. So our quarterly growth rate is slightly below the national average for houses, and that's reflected in what I've just said about the fact that we really slowed down. We saw 1 month, I think it was February, where we had 0% for house price growth change, prices stabilized, but we're starting to see a reacceleration throughout March and another reacceleration again in April. So time will tell whether we're starting to see that segment of the market pick up once again.
And the unit market, again, pretty strong as usual. So units perform very well. Median values rising 0.5% to $698,479. Quarterly growth came in at 1.6%. Annual growth remains really strong, 12.8%, down slightly from 14.1% last month.
So 12.8% annual growth in the unit market compared to 6.8% in the housing market over the last 12 months. And you can see the difference. You can see why the more affordable segment of the dwellings data is showing much stronger growth. I will say also it's not going to be long, and in fact it's probably next month, that we're going to be reporting the fact that median values for units in Greater Brisbane have now surpassed the $700,000 price point. We are sitting just under that threshold as at the end of April. So again, these are really big numbers compared to the discussions that we were having just 3 or 4 years ago, and it's come off the back of very strong growth in the last 4 or 5 years. Look, there's absolutely no doubt that the continued strength in the attached dwelling segment of the market, which includes units and townhouses here in Brisbane, has been driven a lot by affordability. It's also been driven by a lot of first home buyer incentives targeting properties under that $700,000 price point. And now we're probably going to see a further shift in the demand for properties that are still in the more affordable price bracket off the back of the federal election once new policy comes in that is going to also incentivise those first home buyers. And we'll talk more about that in future episodes as more details become available.
And keep in mind the cost of construction, obviously, to build those units.
Absolutely.
That's something that we're seeing less of those units available because they're just not building them anymore. So that stock level is not going to increase that much on the unit side of it as well.
We've definitely seen investor demand move back into that segment of the market simply because the yields are, much stronger in that segment of the market. They're more affordable rents for people that are looking to, rent their properties out, but also what we're seeing is that the demand and the lineups and the offers are still consistently higher in that segment of the market. So that's telling us where we're heading in terms of the future direction. When we're still seeing that depth of buyers, it simply means that prices are likely to continue to escalate if we don't see an increase in the number of properties that are available for sale. And listing volumes are still super tight here in Brisbane.
PropTrack recorded a modest 0.11% increase also for the month as well.
So same trend, yeah. The rental market in Brisbane, it remains tight. So vacancy rates in March were at 0.9%. That was slightly down from February when vacancy rates were sitting at 1%. That's according to SQM research. Rental yields for houses, they've held steady, sitting at 3.5% across all of Greater Brisbane. Whereas for units, we've seen a slight increase in that rental yield again. And we just talked about the fact that those yields are slightly higher in the attached dwelling segment of the market. Units are sitting at 4.6% gross yields across all of Greater Brisbane. Now, I will say that you will find houses that have higher rental yields than 3.5% or lower rental yields. This is simply a median value. Same for units. You'll see some product types and some areas achieving yields that are higher than this and then others that are lower than this, because yield is simply a representation of the income that you're generating as a percentage of the purchase price paid. So super interesting that we are still seeing the yields in the rental market for units grow at a faster rate than the housing market.
Well, we've also seen annual rent growth for houses edge up 3%. Unit rents, however, rose by 4.3% year on year. So that's an uptick of from 3.9% in March. So obviously that demand is still there in that rental side of things as well.
Yeah, so that's the rate of growth in rents over the last 12 months. So it's probably what I was referencing in my earlier comments, that in the unit market, yes, it's more affordable, but we're also seeing more growth rates or more increases in the rents that are being charged in the attached dwellings market. That's the units and townhouses year on year compared to the house market. So both are showing increases year on year, but the unit and townhouse market, not only is it performing in a way that is superior in terms of capital growth, but also in rental income price growth.
So a little bit of a summary, obviously with public holidays, school holidays, we've had some interruptions into the market here in Brisbane. Federal election's done. School's back. Everyone's back on board. The weather's going to pick up. It's going to be great. Look, I think there's going to be a little bit more activity, a lot more activity actually, in Brisbane. Olympic Games have all been decided, venues, that sort of thing. I think it's now back to business for Brisbane, and it's quite exciting. I mean, they've had their rugby league magic round in Brisbane, and that was a success and everything. So I think, I think things are ready to go. And if people are looking to get into Brisbane, now's a pretty good time, I think, to get in and make the most of it.
Yeah, we've been talking on this podcast for the last 2 to 3 months about the uncertainties and the changes. I mean, we didn't know where the Olympic venues were going to be. That's now confirmed. We were a bit unsure about, what was happening in terms of the federal election, who was going to be elected. That's all now confirmed. We had so many public holidays that we needed to move through. That's all behind us. I think now we're in a stage within the market here in Brisbane where we're going to see more confidence move back in. We're going to see sellers confident to list because there's no more public holidays in the foreseeable future, and we're going to see buyers re-emerge, especially if we see those interest rate cuts start to come through. So the buying opportunity for opportunities that potentially had lower demand, that may be behind us. Time will tell, but there's certainly many opportunities in the market. If you are ready to buy, we definitely recommend making sure you are pre-approved so that you can compete with other buyers for quality stock. I will say though, based on what we're seeing, days on market is increasing, especially at higher price points where we're starting to see buyers become quite discerning in terms of what they will choose to buy, and properties that are sort of in that $2 million price point and higher are taking a little longer to sell. So generally buyers have a little bit more time in that area. That said, I wouldn't go and view a property on the assumption that you're going to have more time. It is still important that you are ready to make an offer fairly quickly, because in the event that there may be one or two other buyers that are interested in the property you're looking at, the agent may decide to close offers very quickly. So you need to be prepared to act quickly. I'm simply saying that some of the properties are taking a little longer to sell because buyers are, taking a little longer to decide.
Yeah, I think you'll a lot of people will look back and go, "Wow, probably should have got into the market." So, look, if people are out there and you want to chat, you're unsure, you're more than welcome to contact the team at Streamline Property Buyers. As I've said so many times, it's free to talk to us, and we're more than happy to share some information and talk about what's happening and how we work in Brisbane. So, as usual, that's the market update. But as usual, I will let Melinda wrap things up again. It's been great talking, and we'll talk again soon. Thanks very much for listening, and bye for now.
Yes, thanks again for joining us on the Brisbane Property Podcast. We hope you have enjoyed this market update for the month of April 2025. As always, if you have enjoyed this episode, please share with friends and family. We would love for you to subscribe so you don't miss any future episodes. And if you do get a chance to leave us a review, we would always we always love to hear, what you like about our program. As always, we look forward to speaking with you again next week. Until then, bye for now.